Amazon is raising at least $25 billion in U.S. bonds to fund its AI spending, which Bloomberg Intelligence says could top $300 billion of capex next year. Let's discuss with Bloomberg Intelligence credit analyst Robert Schiffman and Bloomberg Tech host Ed Ludlow. Robert, on this deal, every day, not every day, I'm exaggerating, it feels like we have some hyperscaler coming to this bond market and tapping it. And for the most part, maybe we put aside SpaceX, the market absorbs it. How far can these companies take it? How far can they increase their leverage before we start looking at things like credit downgrades?
I think you better get used to having me on set because we're going to see a lot more of this.
Which is a treat, by
You could just ask, Robert.
We have said this over and over again. The biggest hyperscalers I would consider to be on the Mount Rushmore of credit. These are AA and AAA names that have hundreds and hundreds of billions of capacity. Somebody asked me this morning, what would it take to have one of these names go to junk? You're talking a number that would be, I think, over $1 trillion. Wow. So I just think that what we're seeing here, supply continues to fall well behind demand. Well, spending is going up. And the only way to spend is to borrow more money.
Do they borrow at fixed rates, or what happens if the Fed does have to hike a few times?
Yeah, well, primarily all this extended duration borrowing is all fixed. So now you're locking in costs for 10, 20, 40 years. Remember, Alphabet did a 100-year bond via pounds a few months ago. So you don't have to worry about rates necessarily going up, other than why not borrow now if you think rates are going up? It's actually an incentive to come to the market sooner rather than later and lock in these deals.
Ed, that's the debt side. For how long can the equity side hold up? Because there does seem to be this narrative emerging saying you need to have a return on this investment. You can't keep spending without any fruition coming from it.
The equity side is much more closely tied to, is Amazon or AWS in particular good at AI, right? And they've kind of demonstrated in more recent history that they are, or at least the market gives them credit for it. You know, the thing about what Schiff outlines in the Bloomberg Intelligence React, I find fascinating, which is with capex is going to be $200 billion this year. Why would it jump to $300 billion this year, next year? And the way that Amazon explains it away is not necessarily that you have to keep building data centers to meet with that AI demand. Capex can also go up because the cost of building data centers goes up, right? That has nothing to do with AI at all. There is construction labor inflation. We know there is great memory price inflation still, right? We're very focused on this idea that memory supply is tight. Continue to look at memory pricing. And so that was so interesting when he published the React. And the thing about it is that Andy Jassy tried to explain that in the prior earnings call, April 29th. They said it several times. Capital expenditure growth is outpacing revenue growth.